Mark, it's good to see you. Today, we're talking about 3 ways to maximize your retirement income and minimize your taxes. We've said it before. If you don't have a tax plan, you don't have a retirement plan. So this video is for anybody who's nearing retirement age. We're going to break down a few strategies that they should be considering today. And first on your list, Mark, Roth conversions. Why is that?
Well, it's wonderful to see you again, Aaron, and,
Mhm.
and thank you so much for the time. Roth conversions, why they make so much sense right now. Well, if you think about it, if you go back, let's say 75, 100 years ago, retirement planning meant you didn't buy green bananas because you didn't know if you were going to be around long enough before they ripened. It's kind of a joke, but now we have life expectancy of, we could be living 95 to 100 years old. So with this Roth conversion, if you think about where tax rates are now, taxes are on sale. Historically, the highest marginal average tax bracket is over 57%. Today
Wow.
it's 37%. So we have an opportunity for tax planning as it relates to our retirement income and cash flow planning to now pay taxes when they're on sale. And the other opportunity with the Roth conversion is we can do it when the value of our portfolios is less than what it was a couple of years ago, because
Right.
obviously we've had a decline in the markets.
It's nice that there's a silver lining with those depreciated portfolios. Good point. So, your next point here is to carefully plan your required minimum distribution strategy. I think a lot of us think, okay, when I hit that certain age, I'm going to start taking those distributions, but that can leave you with quite the tax burden.
Well, yeah, you're absolutely right. One of the things that we really talk about in our classes that we teach is we're really talking about required minimum distribution planning. But if we go back, let's say we're 65 and we decide to retire, a lot of us want to, we want to take Social Security early. We want to let our money grow. And a lot of that is because we've been ingrained into accumulation.
Right.
Really, from a tax standpoint, we need to understand how all of our monies, where they're at, whether it's brokerage accounts, pensions, however they are structured, how we spend that money. And this RMD thing, if we don't do things correctly, we're going to end up in forced taxation. Now, obviously, the government has extended out instead of 70 and a half, for some people, it's actually 73 and 75. But all it means is higher distribution rates and higher taxes for us
Right.
if we don't plan things accordingly.
hmm And one of those RMD strategies that you and I were talking about offline, qualified charitable distributions, how do those work?
Well, yeah. So for some of our clients that don't need this money and they're charitably inclined, they can actually take these RMDs. They get the deduction because they're gifting that money to a charity of their choice.
Well, that's a great, sounds like a win-win for everybody. That's a
Yeah,
good one.
absolutely.
All right, the last strategy that we wanted to talk about here, of course, in retirement, healthcare is often your biggest expense, which is why you'd encourage people to look into health savings accounts now.
Yeah. So what we really like about health savings account is and again, just remember we have to be a part of a high deductible
Right.
plan, whether it can be Medicare or regular health insurance, or it could be a company sponsored plan. But we get a tax deduction going in with our contribution, so that's huge. All the money when we have control of how we invest it, that grows tax free. And when we pull it out and spend it for medical expenses, it's all tax free. So it becomes it's a way to get a deduction, grow money tax free, and pay for medical expenses and even vision. If we have that built into the plan, we can now pay for all of that tax free.
Yeah, that sounds fantastic. Well, Mark, I really appreciate being able to talk through these strategies with you. Again, for these, though, specifically, it sounds like the earlier you can have this conversation with an expert, the better. So if somebody has questions, what's the best way to reach you?
Yeah, the best way to reach us is, just call our office. The phone number is 303-681-0113. You can also go to our website, mcgregorwealth.com. There's a easy link where you can click that. We can schedule an appointment on our calendar. We have Calendly.
Very good.
And but either way, just reach out to us and we'll help you with whatever we can.
Perfect. All right, Mark, thank you very much.
All right. Thank you.